Hello traders, today we are going to review Fibonacci extensions, how to measure Fibonacci extensions and how to use them in your daily trading in order to improve your trading. Fibonacci extensions are used unlike retracements. They are used mainly for targeting, for identifying targets in the breakout or breakdown modalities. So here, for example, in the trading view, if you go to a left side menu, you'll see a Fib retracement. So actually, this is the one that you use if you want to draw the Fibonacci extensions levels. So let me show you from scratch how to measure Fibonacci extensions. Is the same as Fibonacci retracement, so you use the same method. So here we have a downtrend. You can see we had a huge push lower in the dollar CAD. We had a huge push lower, and then we made a correction. So obviously we're in a downtrend, and since we are looking to sell the price in a downtrend, we will be looking to what happens if this low here breaks. So at this point here, we don't know where the price is going to stop once it breaks to the downside. So you just go to Fibonacci retracement, you take this swing low, you measure the swing high, and actually here, and then you have the first level. The first important extension Fibonacci is 127.2. and you can see here what it happened. The price here pushed tested the support again. It rebounded, but then once it broke through this big support around 124.50, it pushed all the way lower and stopped at the first Fibonacci extension. So if you traded this, if you sold this push here through this support, let's say below 124, and actually your take profit will be here around 121, where the 127.2 extension Fibonacci extension is located. So we are talking about 300 pips move in the dollar CAD in this move. So let's review another pair also. Here you have another now different pair and a different modality. So we have Euro Pound, and you can see here we created a new high. It's higher than this high, so we are in the uptrend. You can see that we are creating a lower lows. So we are going in the uptrend, and we are looking to buy the price and above this resistance, because we believe there will be some uncharted territory above this high, in order for us to gain some money. So here you have this. Once this resistance is broken, you can see that the price pushes higher. It gets very close. Note that of course, as with every Fibonacci line, you don't get the touch to the pip every time. So here you have a push to 8 pips to the 127 Fibonacci extension. So the price once it broke 89.20, it continued higher. Here continued high 30 pips. It fell down, then it made a new high, and actually it traded briefly above 127. You can see that here there was a lot of profit taking, since the price immediately fell down. In the same chart, I intentionally use the same chart. Here you can see another side of the medal. Now we have a downtrend, we have a push lower, we have a correction, and if you draw this correction from this low to this high, you actually have a take profit at 127, and this is actually where the price stops before continuing its correction to the upside. So if you traded this push here below, you could have gained around 35 pips very quickly, since the price actually pushed briefly below 127.2 before reacting higher. So 127.2 is the first target above 100 when we're talking about breakouts or breakdown. So this chart is great since it offers us a great glimpse into a very structured move that happened in the Kiwi dollar on a daily chart. So you can see here we're in a clear uptrend, we're pushing higher, and here we have a new high, then we have a retracement here, we go and then create a new high above 100. So if you zoom in here, you can see that that once the price corrects in the uptrend, we create an equal high. You can see here we tag the same horizon, which is a 76.30 line. We retrace lower to the first support resist Fibonacci retracement level. We pushed high, and then look where the new high is. It's 127.2. This is a new high. We pushed lower, we create another retracement in an uptrend. Remember, when we're in a trend, retracements are very healthy because we shake off weak, in this case bulls, and then we look to get more support, more strength in order to continue higher. So what happens here, it's 100, we push to 127.2, we retrace lower, look, we push again to 161.8 is our next target, take profit target, before we correct lower, and then we have another leg higher, and we actually get close to the third extension, which is 261.8. So if you're trading breakouts or breakdowns, then Fibonacci extensions are a must-have, since it offers you a chance to identify where the bulls, in this case, since it's an uptrend, are looking to take their profit off the table. So if you're trading in the trading view, you go to retracement, and then again. So you can see here that you have all lines. So from 0 to 100 to 1 is retracements. Above 100 we are talking about the extensions. You can see here we have a 127.2, we have 161.8 and 200. These are the three key levels. Of course you have more, but it's very rare that you see these prices stacked. The mostly used prices are 127.2 and 161.8.